Yo, what's up everyone? My name is Andrew Warren, and in today's video, we're going to be talking about some recent news released on Tesla stock that is some actually pretty good news, and then we'll also be discussing a few other smaller news pieces as well that are related to the stock price also. So this is more in terms of a price target. We know that there are banking companies and other firms that are constantly updating and changing their price targets, fair values, and things like that on various stocks in the stock market. So whenever I see a notable piece of news about a price target for Tesla, I always like to do these videos, whether it's a good price target or a bad price target. I always like to discuss what some of these more popular price targets are, at least with the popular companies right now, and address that in terms of my opinions, my perspectives, and things like that. So, as always, if you do appreciate videos like these, whether it's Tesla news or just other Tesla content, then please make sure to smash that like button. But just getting into the share price for today, we had a record close for Tesla. Our all-time high, not counting a record close, is $17.65, but the all-time record close is what we received today, which is a share price of $1,646.31. So with that, just addressing everything in terms of the fair value, like if you look at the research report for Robinhood Gold, this is $5 a month. This is the Morningstar fair value, and according to them, their fair value for Tesla is $751. And as you all know, with many of the videos that I've done on my channel, I've emphasized more and more again that analysts are just completely wrong about Tesla. And especially as there is this big wave of Robinhood investors coming in and just new age investors, whether it's Zoomers, millennials, and just younger people that are getting into investing, there is this big transition happening, especially with the most recent crash, where a lot of the younger people and the newer investors are making some solid decisions in the stock market. As we know, a lot of the big institutional investors, we're talking like the investors with millions and billions of dollars, a lot of them missed out on this most recent recovery, whereas a lot of us retail investors were buying the dip. But what I'm trying to prove here is that I think a lot of us retail investors are more intelligent when it comes to these investment decisions than a lot of these big firms and companies believe we are. And we've had people go on CNBC for months and months and months last year just talking mad trash on Tesla, talking about how it's worthless. We had that one infamous Tesla bear that said it was basically going to $0 and it would be worthless. And over time, we slowly saw this transition where analysts started getting around. They started going along with the retail investors and agreeing that Tesla is worth its share price. And we started seeing analysts adapt to what retail investors had been saying for the longest time. So instead of spreading this bearish sentiment that we had seen the past few years, we're starting to see them come around to us. But they don't like admitting straight up that the retail investors were right. Now, some people will do that. Some people like Jim Cramer will say that and admit that. But I noticed that a lot of them just start slowly upgrading their price targets or just making their bearish predictions a little bit less bearish and then less bearish and less bearish over time until it's pretty much even with what a lot of typical Tesla investors believe. So over time, as the share price for Tesla just keeps on skyrocketing and growing and growing and growing, and as these bears get proven wrong and wrong and wrong again, we see this transition happening where all this time it was pretty much proven that the younger retail investors were correct about Tesla. A lot of the institutional investors weren't very bullish on Tesla. I mean, you have a few people like billionaire investor Ron Barron, and then you also have billionaire Chamath Palihapitiya being bullish on Tesla as well. So there's been a few billionaire investors and a few people that have been bullish on Tesla, including ARK Invest as well. That's another huge one that I want to make sure I mention in this video. ARK Invest has been very bullish on Tesla, even in the face of a lot of Tesla bears laughing in the face of Cathie Wood and Tasha Keeney. So yes, there have been some major investors really making intelligent decisions on Tesla, but what I've seen so far, at least the consistency, seems to be around more of the retail investors catching on sooner compared to the larger investors, the institutional investors that were a lot more bearish on Tesla than the retail investors were. So this was really significant in the fact that retail investors caught on a lot earlier than the institutional investors did. And that's honestly kind of a rare occurrence. So my point with this video is that a lot of Tesla investors and just retail investors in general are getting some more credit in terms of their predictions and ideas about the stock market. And I think that's going to continue as we have tons of financial stock market content creators like Jeremy from Financial Education and just many notable people that create content on YouTube. And I think that's going to become more and more popular. Also, Solving the Money Problem, Stephen Mark Ryan, he's another fantastic one, and a Tesla bull, and he's a YouTube content creator. So I think we're going to see this transition happening more and more, where the opinions of some of these content creators on YouTube, or should I say retail investors, are going to be seen as similarly valid to investors that we look up to, like Warren Buffett and other ones that are popular out there like ARK Invest as well. So I think there is this transition happening where retail investors have more of a voice nowadays, especially with YouTube. So my point here is, before I get into this news piece with this video, we are seeing a lot of banking companies and firms and analysts changing their price targets on Tesla and of course other stocks as well. Other ones that they have been wrong about is Apple stock. Let's go back and check that out. Analysts have said Apple stock fair value was like $240 over like the past year or so, it feels like. If we look at it right now, they've upgraded it to $285, but still it's been at $240 forever, and we are about to have a stock split while Apple is near $460 right now. So my point is, a lot of analysts are simply just getting this all wrong, and they're almost reacting late to just adapt to what the stock is performing at this point. So you'll get my point as we get farther into this, but let's go ahead and check out Morgan Stanley for today. This is a new price target by Morgan Stanley, an upgrade. So let's go ahead and check this out, and then I'll get into it a little bit more. So as you can see, this is an article by Business Insider, and it states Morgan Stanley upgrades Tesla stock and boosts price target on high hopes for battery business. So as we get into this article, it does mention just a few key points right here. It states Morgan Stanley analyst Adam Jones upgraded Tesla shares to equal weight from underweight late Thursday, citing a bullish outlook for the company's third-party battery sales. And then it also states the bank lifted its price target for Tesla stock to $13.60 from $10.50, and the target still implies a 16% decline from Thursday's close. And then also it states the automaker's third-party battery and electric vehicle powertrain business is worth $310 per share, and now factors into Morgan Stanley's base case after strong growth. And then it also just emphasizes Battery Day on September 22nd, in which there are some expectations, and it mentions that that is some of their justification for this recent change. So like I said, the price target has moved from $1,050 per share to $1,360 per share. So getting back into this is kind of one of those examples where they're moving up the price target, but it's still like a diss on Tesla. It's still like a bearish sentiment on Tesla, where Tesla stock is like $300 over their price target already. So it's kind of like a useless price target in my opinion, because it seems like we consistently get new announcements like this. For example, like I've said, the fair value for Tesla on Robinhood right now is $751, and it's kind of just similar to Morningstar updating the fair value and saying like tomorrow the fair value of Tesla is now $1,100. The fair value is still like $400 to $500 less than the actual share price it is right now. And I could entertain the notion that Tesla may be at a premium right now, but the reason it is at a premium is because when you look at the competition, the progress that they're making right now, and then also compare that to how other major companies that are trying to get into the EV business are saying Tesla is 2 years ahead. And keep in mind, they're not going to admit Tesla is 3 or 4 years ahead. They'll say 2 years just to keep it conservative and not make their company look too bad. You have the CEO of Volkswagen and Audi saying that. Now keep in mind, I gave them a lot of props for mentioning that and actually noting this truth. But my point is, the reason Tesla is a little bit expensive in terms of a price is simply because they don't have a lot of competition. They're operating on declining cost curves. They're building more factories right now and making a lot of progress, especially with the Shanghai Gigafactory. And they're also totally dominating EV sales right now in the automotive sector, since most companies are struggling in this economic situation. So it's almost useless to have a lot of these analysts or firms upgrade their price targets from what was already a pretty low number to just a slightly higher number that is still lower in comparison to what it's at right now. So I just think they still have it wrong, and honestly what we're seeing right now with the analyst is them just simply adapting to what Tesla has already done or what they're doing right now in terms of a share price. Like, for example, I remember when Tesla bumped up to like $1,500, it went from like $900 to $1,500, and then all of a sudden you had all of these analysts upgrading their price targets. It was still a little bit lower than Tesla. Some were like $1,700, $1,800, I believe, but all of a sudden you had this sudden surge of analysts changing their price targets because Tesla had surged up so much, and it became clear that at least for a long time, Tesla wouldn't be dropping back down to $900. So that's kind of my point right there, where these analysts are simply just adapting to the movements of the share price in comparison to some people like Stephen Mark Ryan, and then you have myself, and especially the people over at ARK Invest as well, that are simply just not even close to some of these other analysts that are just coming out with these low price targets. So what I'm trying to note here is that I actually think a lot of these analysts are just simply clueless on Tesla, and I know that may be a controversial statement, but we've seen it so far over this past year. And I'm not going to name any names or firms or organizations, but it seems like there was just almost an agenda to push against Tesla and just push out constant bearish sentiment on Tesla stock. And with this, I'm more referencing 2019 and earlier, and not so much with this year. We have seen a lot of firms and analysts adapt this year, but I'm more referring to 2019 and earlier. And we saw the truth reveal itself regardless, and the stock has skyrocketed since then. So the truth has been revealed. Tesla stock is still skyrocketing. Once again, we could obviously see a pullback sometime soon just because of how much it has gone up over the past few days. But like I said, it seems like analysts just don't understand this. Now, keep in mind, there are a lot of really good analysts as well that I think are really intelligent and forward-thinking. Like you have Kathy Wood from ARK Invest and Tasha Keeney and others as well. But I'm just trying to make this point right here that I don't think us as retail investors should always take analysts' opinions as the word written in stone, as the truth of everything. And I think the more that retail investors realize that, the better chance they may have at finding the next big company. Now, that's just my personal opinion, and so I kind of went on a tangent here. This video is supposed to be about the good news, but I just wanted to note that as well. But getting into the good news, for one thing, all of these analysts are upgrading their price targets now. They know that they've been proven wrong on this, so I'll get into some of the better news. I'm sorry for actually getting so far into this video and not noting the good news just yet. So we have this one right here. It says Jim Simmons' Renaissance Fund dumped Apple and Amazon stock and boosted its Tesla stake last quarter. So this is starting to show some bullish sentiment around Tesla. As it says right here, Renaissance Technology sold its Apple and Amazon stakes and ramped up its Tesla investment last quarter, according to a regulatory filing. And then it says right here, Rentech also raised its Tesla stake by 44% after slashing at 80% in the first quarter. So this is just once again after the analysts have been proven wrong, they're getting right back into Tesla. So it says they raised its stake by 44% after slashing it by 80% in the first quarter. And that's what happens to Tesla shorts. So that is a pretty solid piece of news in my opinion. They're raising their stake by 44%. They have to have some bullish sentiment on this one if they're raising it by that much. And also, this is probably the best piece of news in terms of like price targets and things like that we've gotten so far. So this says right here, Bank of America upgrades Tesla and sees 8% upside over the next year after more than doubling its price target. So they have more than doubled their price target for Tesla. This is finally a big transition. At least with this one, it's not like disrespecting Tesla where it's saying, okay, we've increased our price target, but instead of saying $900 this time, we'll say $1,100. You know, this time they've actually put out a reasonable price target. So let's check this out. As it says right here, Bank of America on Friday updated Tesla to neutral from underperform. So that's a good thing as well. And then it raised its price target to $1,750 from $800. So like I said, more than double, and the price target is above what the current value is right now. So they do deserve some props for this one right here. At least it's not under what the current share price is. They deserve some props for that. That's a lot different from what we've seen with some of these companies that are still under the current share value. So I do give them props on that. And then as it says right here, the firm's new price target implies an 8% upside for Tesla shares over the next year. And then shares of Tesla ticked up as much as 4% on Friday. So it's mentioning the most recent movement. Now it's mentioning an 8% upside for Tesla shares over this next year. And regardless, that is still pretty solid news. That's around the typical stock market average. But in my opinion, I think we'll see a much higher growth rate over this next year than 8%. I think it's going to be significantly more than that. But still, regardless, we are seeing some of these analysts at least start to raise their price targets a bit. Even if it's under, they're starting to realize they were wrong. So that's good news in itself, that at least it's not like way back in 2019, mid-2019, early 2019, when people were saying Tesla is going to pretty much nothing. This is a worthless company. They're not not making any profit and all of these things like that, where everyone was being so bearish, and it seems like the retail investors were the only ones that had a clue what was going on for the future. So that is good news in itself that we're starting to see some of these analysts adapt. Now, of course, Tasha Keeney and Kathy Wood from ARK Invest, they've already been on it. They have my utmost respect. But it is at least good to see a more positive view on Tesla from these institutional investors and, of course, from these analysts as well with the price targets and things like that. So that is pretty nice to see. And I thought I would just share that with you all just out of pure interest. But if you all enjoyed this video, please make sure to smash that like button. And also feel free to sign up to Robinhood and Webull in the description below with my referral link. And if you sign up with my link, you'll get some free stocks, especially with Webull right now. If you deposit $100 and you use my link, you'll get 2 free stocks. And even after that, you can take the $100 right back out. So it's basically just free money. But I hope you all enjoyed this video, and I hope you have a fantastic rest of your week.